Robert Minikin, he's Senior Foreign Exchange Strategist at Standard Chartered Bank. Now, Robert, thanks for joining us. I mean, we saw that trade data. I mean, it was just mind-boggling how it was so big, that deficit. I think it was 6 times more than the average forecast. Now, that didn't preempt this weakening, did it? Well, that must have been in the works already. And what signal did it send?
Well, I think we need to take the January and the February numbers together. So we had a surprisingly big trade surplus.
Even then, it was 4 times worse than last year.
So it was. I think it's clear that the trade surplus is shrinking this year against last year. But the February number particularly was an outlier. But you're right. PBOC has been giving a very strong signal, the weakening on Monday, but also the weakening on the previous Monday as well. Both very big moves. And I think the PBOC is signalling now there is clear two-way variability in CNY. It can move in either direction.
So it can go up and it can go down like any normal currency.
Exactly.
But does that also, if you read between the lines, suggest that they believe that the value of the RMB now is appropriate and is actually valuing it correctly?
Well, we've had sort of a clear signal, I think, from the central bank that it believes that the yuan is not too far from an equilibrium value. And we've got to bear in mind that the current account surplus this year is going to be around 2% of GDP, which isn't unusual by the standards of the major developed economies. So certainly the imbalances there have shrunk markedly. But the one thing we're looking for now is a change in the width of the daily trading band for the Chinese yuan against the US dollar, and that could be coming in the next few weeks.
What would that do if we get a widening of the band?
Well, that basically allows more variability intraday, and it allows PBOC to give a little bit more freedom for market forces to play day to day in driving the currency's value.
So we're moving towards a free floating currency at the speed of continental drift, in essence.
Well, the issue is that, of course, that there is still a current account surplus, and the problem really is that there isn't the mechanisms for recycling that through building up overseas assets by the private sector. So the public sector and the central bank sort of has to play that role. So I think what we're going to see is, you're right, perhaps a bigger role for market forces over time, but also I think China's got to look for other ways of deploying its assets overseas rather than just building up holdings of US treasuries, for example. So we'll see more FDI and other types of investment overseas.
I'll come and talk about that in a second, but I just want to still get to this whole notion of, now we have a yuan which can go up and down. There are a lot of people in Hong Kong, a lot of people in other parts of this part of the world have gone very long the RMB. Do they unwind those positions?
I don't think it's going to fall very far, to be frank, for a range of reasons. But I think that this period of stability is likely to persist for a while.
No, because it was seen, wasn't it, just even a month ago, as a one-way bet, really?
Well, I think the expectations of appreciation have been diminishing for a while over recent quarters, and we've seen that in the non-deliverable forwards, where the amount of forward appreciation for CNY has slipped back quite a long way. So I don't think this development here is a huge surprise. And I think that we still believe that the Chinese yuan can appreciate in the medium term, because China is still a strong economic success story and a powerful development dynamic.
Robert, let's talk about then, where does China deploy that surplus we were talking about then? I mean, do we see, of course, the obvious place being these assets which may well become fire sale prices in Europe? Is that something they'd be interested in?
Well, I think they'll play some role there, but I think that they've got a much more strategic ambition, for example, in terms of looking at natural resources and a desire to sort of lock in supplies of resources from commodities from overseas, alongside other sort of issues to do with industrial policy, rather than, I think, specifically to do with the European sovereign debt crisis. They will play a role there. But I don't think that's going to be the big change in terms of allocation of overseas assets.
Okay, let's just talk generally about what's happening with currencies in Asia, Southeast Asia, and what do we have at the moment, and what are the ones which you think are going to see appreciation, and those which perhaps are looking a bit weak at the moment? I mean, can we talk about Indian rupee as well?
Well, the Indian rupee, we're actually holding a sort of fairly neutral stance just here.
It's a horrible year last year for it, and remember that run up this year, and then is it sustainable?
I mean, obviously, it's got a positive carry in terms of the forwards, which is supporting it, but there's still questions both about the growth picture and, of course, the current account picture. So we actually remain fairly neutral there. In terms of currencies we think that could come under near-term downward pressure, we've got the Indonesian rupiah, which we feel is threatened by higher inflation outturns, and also here in North Asia, the Taiwan dollar, which may be sensitive to any weakening in the industrial cycle in North Asia. But the whole of the first half this year, we think, will be dominated by volatility rather than trending, and if we see stronger performance from AXJ currencies, it's going to be later in the year, in the second half.
Robert, thank you so much for joining us. Robert Minikin there from Standard Chartered Bank.